Welcome back. We were just talking about it. Affordability, just the interest of, the younger individuals wanting to be able to buy a home, not feeling like they can afford it. So, a lot of frustration around that. After years of high mortgage rates and affordability challenges, there may be signs that the movement is happening in the housing market. The National Association of Realtors' latest existing home sales report shows sales in May rose more than economists expected. So, joining us live to explain what that means for you is Ted Rossman. He is the principal analyst with Bankrate. Thank you for taking some time to talk with us. All of a sudden, I have lost my ability to speak. How are you today?
It's good to be here. Thanks for having me.
Good, good. Well, you're the one with the information, so I'm going to let you do the speaking. Tell me a little bit, what is driving this increase? Why are more people now perhaps being able to kind of check that box and say, yeah, this home, I can afford it, let's buy it?
That's right. Existing home sales were up 3.2% in May, both on a year over year and month over month basis. That's actually the strongest month of 2026 so far. It exceeded expectations a little bit. So, what's going on here is kind of twofold. On one hand, mortgage rates are still relatively high. The average, as you said, is around 6.5% for the 30-year fixed. That is a little bit lower than we were seeing a year ago. We were closer to 7% a year ago. So that's something. The median buyer is saving about $100 a month because of that drop. The other thing, and actually maybe the even bigger factor, is that home price growth has slowed. Nationally, we are seeing growth, albeit fairly minimal. In many markets, prices have actually started to fall a little bit. And that's actually especially true across the Sun Belt. So places like Atlanta and Nashville and in Florida and Texas, places where prices had really run up a lot. Now they're taking a bit of a breather. And that is providing people with a bit of an opportunity to get in. May was actually the best month for first time buyers in about 6 years.
And I guess that's decrease can be viewed differently depending on what role you are in. I know I got my property tax assessment in the mail just a week ago, and the value of my house had actually fallen. And for me, since I'm not looking to sell my house right now, that was good news because it means a little bit less that I'm going to have to pay in my taxes this year. If you're trying to sell, then you may not be as thrilled about that news. What are you seeing from perhaps the seller's perspective on this?
The buyer has gained the upper hand in many markets, especially in the South, where inventory has really rebounded. There's been a lot more building in the South and the West than there's been in the Northeast and the Midwest. So that's actually supporting a bit of price declines. It's better news for the buyer. Now, to be sure, if you're a homeowner, your home is probably worth a lot more than it was 5 years ago. It's just maybe not quite as much as it was 1 year ago. So it's all relative. When we talk about the seller, a lot of people still have the golden handcuffs of the 3% rate that they secured during the pandemic, and they still don't want to move. They don't want to trade that 3% rate for one in the sixes. That is still a thing, although with every passing year, those golden handcuffs loosen a little bit. People are moving for jobs, they're moving for family reasons, lifestyle, other things. They're not going to be stuck forever, although that is a key factor. Sellers need to be realistic right now in terms of price because you may not get exactly as much as you want for the house. You may not get the super quick sale. Now, if you're priced right, it could sell pretty quickly. Be realistic though, as the seller. The spring season has been slower than anticipated. A lot of people have been reluctant to make a big purchase with a lot of the uncertainty that's been going on with interest rates and the war in Iran and stretched budgets and all that. Still tough for the first time buyer in particular because they don't have that equity to trade in. If you're an existing owner, at least you have a lot of home equity. You may have the golden handcuffs of a very low rate. But right now, the best way to sell is to put your best foot forward on price, be realistic. The buyers in the market tend to be pretty serious buyers. We're not seeing as many sales as we thought we would this year, but the people in the market are generally pretty qualified and pretty ready to move.
Perspective is everything, isn't it? Because I know a few years ago, there was a home that sold in my neighborhood for just an astronomical amount, certainly more than I ever would have expected. And so that made everyone think, oh, this is what we could get for our house. But this is a very different market. And so you can't be looking at what happened 3 or 4 years ago. You have to really be looking at what is happening right now. And I would imagine as well with that perspective, yeah, I was talking with my parents a couple weeks ago and they were reflecting on mortgage rates. And they were, it's like, when we bought our house, it was, 6, 7, 8%. So they were kind of like, from our perspective, these interest rates aren't as bad as some that we experienced when we were younger and we were buying a home. So, have you seen people start to adapt to these higher mortgage rates and maybe kind of be more willing and say, this just is what it is and it's not going to change much anytime soon, but I want to go ahead and get into that house, so I'm just going to bite the bullet and do it?
Yeah, I do think people are getting more realistic about that. Yeah, and you're right. I mean, if we go back 40, 50, 60 years, 6.5% is pretty average. If we look only at the past 30 years, the average was more like 5.5. And if we were to look only at the past 10 or 20 years, a lot of times we did have really low rates. We got used to very low rates ever from the Great Recession, like 2007, 8, 9, through the pandemic, rates were really, really low. And there is some kind of recency bias with that, but it is starting to fade a little bit. We did think mortgage rates could be lower this year. We entered the year around 6%, and we thought we could fall to about the mid fives. And then the war in Iran has been the real key factor pushing rates up because of the inflationary impacts, the higher oil and gas prices that are affecting not just what we pay at the gas pump, but transporting physical goods from point A to point B. The fact that inflation has rebounded means that the Fed's going to keep rates higher for longer. Investors of treasuries are keeping rates higher for longer. So there may not be much movement the rest of the year in mortgage rates. We may be kind of in this plateau, mid sixes. Maybe we go down a little bit. Maybe there's times we go up a little bit. I feel like 6.5 or so is a reasonable assumption through the rest of the year, unless something unexpected happens. The Fed doesn't directly affect mortgage rates, but it's actually believed now that their next move might be higher, not lower. That's a big difference from what we thought at the start of the year.
Let's say you are that first time home buyer and this is what you want, and so you have to work with the economy you have, not necessarily the economy you desire. So what advice would you have for them as they enter the market and say, we're going to do it?
A lot of people are talking about marry the house, date the rate, meaning that rates could fall in the future. And maybe a year or 2 or 3 years from now, you can refinance. If you have the long view in mind, that's important. A home is typically a purchase that you're planning to stick with at least 5, 7, 10 years, maybe even more. If you are a qualified buyer, if you have good credit, if you have the down payment, if you have the cushion for repairs and maintenance, and you're planning to stick around a while, this school of thought can actually make a lot of sense. Don't put all your eggs in that basket because rates don't always do what we think they're going to do. But if you can swing the payments now, and it would be even better if rates were, let's say, a point lower, well, you could buy now and then you could refinance if and when that rate drop happens. If you're buying into a place that you're going to stick around and it's big enough and it's a good school district and all these things that may or may not be relevant to your family, but you think about the individual circumstances. So I would really come back to those fundamentals. Don't buy too early. Renting is not throwing your money away. Renting does have some advantages in terms of flexibility. You're not on the hook for repairs and maintenance. You can move for a job. There's a lot to like about ownership too. The median net worth of a homeowner is 40 times the median net worth of a renter. 80% of Americans still view homeownership as part of the American dream, but you want to do it on a timetable that's right for you. You don't want to be what's known as house poor, where you've put so much of your net worth into this purchase that there's not enough left for other things. So be realistic, keep the long view in mind, and keep that refinancing card in your back pocket if it becomes available in the future.
And you just led right into what I was going to ask you next. When you are really trying to take that long term financial plan, you might be looking at the mortgage payment and you're like, yeah, okay, I can swing that. But what are the hidden costs that people might not be thinking about that they also need to factor in to make sure that if they make this purchase, this is something they can afford?
Everything from homeowners insurance to property taxes, Your utility bill could well be higher as a homeowner than a renter because a lot of times the footprint of the home is bigger, so more space to heat and cool and all that. You really do want to be mindful of all that. And then there's also the repairs and maintenance, of course. A lot of times that's something like 1 or 2 or 3% on average of your home value every year. Some years are going to be worse than others. I mean, sometimes you might get hit with a big bill to replace the air conditioner or the heater or the roof or something like that. You want to be building this cushion as you go so that even these surprise expenses are not really a surprise to the budget. You want to have some kind of sinking fund available for, we don't know exactly what, but something's going to need to be fixed or replaced at some point. These are all things that we want to build a buffer for, especially as a homeowner.
There was a point in time where we were doing stories about people writing letters to sellers, explaining why you would be the best person to be chosen to buy that home. We are not in that economy right now. That is not what's happening. It seems like we have really flipped, and now buyers are getting the opportunity to push for more concessions, more repairs within a home. Are you seeing that become more of a trend as we start seeing these buyers enter the market? Are they getting more opportunity to negotiate?
We are seeing that. We're actually especially seeing that in the new construction market, where about a third of builders are cutting prices and about two-thirds are giving some other sort of concession. Maybe that's free upgrades in terms of nicer finishes or something like that. Maybe it's a temporary mortgage rate buy down or a credit for closing costs. You can try this with existing homes as well. You can ask for repairs and you can ask for closing cost credits and things like that. This is all some evidence that the buyer is starting to gain more of the upper hand after several years in which sellers had the upper hand. We're not seeing as many crazy bidding wars right now. There is actually an opportunity for the well qualified buyer to sort of thread the needle right now because, as much as you would like lower prices and lower rates if you're a buyer, if we did get all those things, a lot of people would come out of the woodwork, especially lower rates. Like if mortgage rates were a point or two lower, that actually would probably have the effect of raising prices because people could afford to spend more for the house. So actually right now, I realize it may not feel like the best time to buy a house, but if you do check all those boxes we talked about, you could take advantage of the lesser competition right now because there is a lot more inventory relative to demand than we've seen the last 2 or 3 years. That's an opportunity for the right kind of buyer.
Again, it's all going back to what we were saying earlier. It's just perspective and really kind of looking at how you can make the most of the economy that we have right now. All right, well, finally, if someone is starting this home buying process, what are just the 2 or 3 things that you would tell them that they should do before house hunting?
It's really important to think about the finances on the front end. So that's going to mean checking your credit scores and reports, getting any errors corrected, doing whatever you can to brush up your credit score because every quarter point, every half point really matters on a mortgage. It may not sound like a lot, but a half a point, that could be tens of thousands of dollars over the life of the loan. So put your best foot forward from a credit scoring standpoint. Compare lenders aggressively. That's important as well. And this is going to be important once it comes time to start looking for homes and putting in offers. If you can get pre approved, that's a feather in your cap from a buying standpoint because you know that you have the financing, provided there's no last minute snafu or something. You're going to be taken more seriously by real estate agents and sellers if you have that pre approval step. So it's something that you want to do a little bit of homework before you start going to open houses.
I would imagine that also if there just happens to be two really good competing offers on a property and one person is pre approved, that kind of gives that seller a little bit more assurance if they go ahead and go with the person who has that pre approval and can say, look, I'm ready to go. I can do this.
Exactly.
Yeah.
Yeah, not everybody can afford to pay cash for a home, but if you can at least be pre approved, that makes the seller more secure that this transaction is going to go through on time. And that can be an important factor.
Ted Rossman, principal analyst with Bankrate. Thank you so much for spending a bit of your time with us on this Friday afternoon. We really do appreciate it.
My pleasure. Thank you.